The easiest way to calculate your emergency fund is to not calculate it all and to rely on a couple of data points. The rule of thumb for emergencies is that you should have 3 to 8 months of expenses saved away in an emergency fund. But where did we get here, and why have we been regurgitating that same advice for years? I'm Lindsay. I'm a financial therapist. I help people at the intersection of money and mental health, and specifically, I help people and organizations enhance their financial literacy content by talking about the emotional side of money. Of course, I'm talking about the emotional side of money, but I'm also like, just maybe we can put on our critical thinking caps and start to figure out where the heck the idea of a 3 to 8 month emergency fund came from and figure out if that's even something you need. To be clear, I think we all need an emergency fund, but it took me a while to figure out where everybody kept repeating the same information about emergency funds. I looked and I looked and I looked, and I remember reading years ago something like we need 6 to 8 months of expenses in an emergency fund because that is the length of time it takes a person to find a new job in the event that they were laid off. But that is fuzzy at best, and it was also either information coming from the very early 2000s or 2008, and I thought it just required a little bit of critical thinking and introspection. Let's start out with what an emergency fund is. An emergency fund is cash that you have in a savings account, preferably a high-yield savings account that you can tap in the event of an emergency. This is a crucial piece of financial security and stability because the idea is if you have cash on hand and you have an emergency and you're able to pull that money out of the emergency fund, it prevents you from going into a deeper financial hole. If you had no money in a savings account, had an emergency, and had to put things on a credit card that had a really high interest rate, or taking out a personal loan, or kind of scrimping together funds from different people. The idea is that it's both literal and emotional peace of mind that you have a financial safety net. I shared in this video that we need to refresh our relationship with emergency funds, and thankfully there are researchers out there who already crunched the data and basically did this for us. Jorge Sabat and Emily Gallagher together combined their brains and ideas and actually used real numbers to figure out what is a good financial rule of thumb when it comes to emergencies. They critically thought through the question, how much money do people actually need to be saving for an emergency? Because most financial experts are saying we need 3 to 6 months of income set aside. And what they found through a nice broad data set, there's nothing that makes my heart sing more than a diversified data set instead of like this sample size of 6 people, and then we make all of these assumptions based on it. I digress. They analyzed data of folks who were considered low income because those are the people who are most likely to need cash for an emergency fund and not have other avenues of products or family help in the event of an emergency. And people on the lower income range of things are already more likely to be in financially precarious situations. So they specifically looked at folks who are in that lower income range to figure out how much do they need in the case of an emergency that prevents further financial hardship. And what they found was it was not 2 months of expenses or 3 months of expenses or 6 months of expenses. They found a very specific number in 2019, $2,467 was the amount needed to prevent an emergency from becoming a financial disaster. And they also found that as soon as you hit $500 saved, for every single dollar you save after that $500, you're increasing the likelihood that you won't fall into financial hardship in the event of an emergency. So what does this mean for you? Well, what it means for you is that we now have some good data on how much money you need to have set aside. Instead of being like, oh, I'm never going to be able to save 8 months of expenses, we have a great benchmark for you to start with. If maybe you do want to move toward a more conservative approach and have more money saved, we have an actual number that we can point to and say, here is the reason that we advise you to save this amount, versus the old guard that just says, experts say you need 3 to 8 months of expenses, but nobody can actually find where that data came from. It's just something we've all been regurgitating because somebody else told us and we thought it sounded like a good idea. So rather than thinking of 3 months, 6 months of expenses, I think the first benchmark is about $400. And the reason that I want you to aim for $400 is that, yes, the bigger number that Sabat and Gallagher have found is a good number to shoot for, but we want to start with a stair step, with a financial goal that is achievable. And the reason I like $400 is because in 2020, about a quarter of Americans had less than $400 available to them in the event of an emergency. So we want to move past and beyond that particular number to help get you that very first step toward feeling financially secure. So first, work on saving $400. Then I want you to work on saving up $1,000. $1,000 is more of a mental thing than anything rooted in science or data, but I find for a lot of people, just to see those 4 digits in their bank account helps them to feel secure. And then I think it's worth taking that 2467 number that Sabat and Gallagher found in their research, adjusting it for inflation, and making that the third benchmark of your emergency fund. When adjusted for inflation, the study was done in 2019. I'm recording this video in 2023. Inflation has been a boomin'. That number now is $2,970. So it's worth typing into Google inflation calculator, figuring out what the dollar amount is that you need to be saving for based on that research. Those are the first 3 amounts I want you to have saved: 400, 1,000, then about that 2,970. Now we have some breathing room. We have the ability to reach in to that emergency fund in the event that we get into a fender bender and need to pay for a car insurance deductible. We have the ability to pay for groceries if you are unable to work temporarily. We have some money available to pay rent for a month or even partial rent for a little while. Now we have psychological and financial safety. And if you still want to work toward increasing your emergency fund, then we can think about moving into how much I need based on my monthly expenses. And the way that you do that is take a look at your last 3 months of spending and really calculate, of all of that spending, what are the things that I absolutely have to spend money on in order to basically live. How much is my rent or my mortgage, transportation, insurance for said mortgage, rent, or transportation, food, medicine? What are the things that I need in order to survive? And we want to tally up those specific numbers. We're not going to add in things like going out to eat, going to the movies. Not that those things aren't amazing, but if we're really in an emergency, we're not going to be spending money on going out to eat and going to the movies. So we want to get an idea of what is the bare bones amount of money that I need every single month just in order to survive. And the reason I'm telling you to look at 3 months of spending is because oftentimes that gives us a better average of what our actual spending is than when we look at 1 month. For example, you might have been working from home a lot over the summer and then back to school comes and all of a sudden your gas goes up because you're driving kids from play practice to after school activities or whatever. So you might find that your gas expenses go up. So we want to make sure that we include that when we are thinking about how to calculate an emergency fund. Once you have that number, that is your 1 month emergency fund. It might be $3,000, it might be $5,000, it might be $10,000. There is no one answer, but that is going to be the next number that I want you to aim for when it comes to increasing the amount of money you have in an emergency fund. Just a couple of quick reminders about an emergency fund. An emergency fund is meant to be tapped into you guessed it, in the event of an emergency. It is not meant to be used as like, oh my gosh, my favorite designer is doing a trunk show and I need to get some of their bags. It is not meant to be used on a flash sale to take a long weekend. Those are all great things that you can spend your money on, but we're not using your emergency fund for that particular reason. The other couple of things to keep in mind with an emergency fund is you want it readily accessible in a place that is insured. That usually means at a credit union or at a bank that is FDIC or equivalent insured, and preferably in a high yield savings account. Most checking accounts are paying minimal interest on their accounts. But in high yield savings accounts at the time of this recording, I'm seeing very frequently anywhere between 4.5%, and 5% interest rates on your savings, which means for every $100 you put in, if there's a 4% interest rate, you're getting $4 added to your savings account just for having your money in that type of savings account. This emergency fund money is not meant to be invested. It is not meant to be tapped into in 10 years. This is meant to be available when you need it. And usually when you need it, you're not going to want to have to scramble around, call places, get things out of a brokerage, pay taxes on the money. You just want it available when you need it. And that's why a plain old high yield savings account is the place for that emergency fund to be. I hope this helped you calculate your emergency fund the easiest way, especially when there's hardly any calculations involved for those first 3 steps of your emergency fund, that $400, $1,000, and then the inflation adjusted safe number from the emergency fund research that I shared. If you're feeling a little bit overwhelmed with everything that I shared today, you might want to check out my video on making choices around money, especially when you struggle with financial anxiety. I'll give you some tips and ideas on how to deal with that. I'll see you there.